General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
All right, knock out this chart work. Let's see what we got here. Consumer confidence tomorrow. Yeah, that makes sense. So today was an expansion day, engagement day, confidence level was medium. We had the conditions confirmed, price delivery, signature, time theory, anchor point is Tuesday. Expansion played out today. I don't think we hit terminus today. The NASDAQ 15-minute delivery. So we got the AM chop, expanded in lunch, retraced in dinner, or for PM session. And we stayed in this Asia-London range most of the day. We did that yesterday too. A lot of them choppy days is just from us being in overnight range all day. Let's look at this. A lackadaisical. We expanded, but we're not expanding strong. So put playing in an officially traded range. Even NVIDIA didn't move much today. Go on the daily. Closed above, respected the order block. So everyone wants higher prices, but on what merit? AVG is the only one left to report out of the top 10. The headline this week is Trump Iran again. So he gave him a deal and a deadline. The same thing that's always happening. SPX. Basically the same thing. This AM chop has been happening a lot too. You can basically just do lunch PM session. I was pointing out how these runs were barely using fair value gaps. No FVG, no institution involved. Check out the daily. It's a classic Tuesday low of the week. Said previous week's highs untapped, but it could still just be a bull trap before the weekend. I think the thing to watch is the bond yield. We have 4.5 on the 10Y. A few pushes higher and we tank. The cheapest trade is still the sell from the top from a short-term perspective. They got to do something with them yields. The SPY. Pretty much the same thing, just in this range, previous week's range. We got this gap here left. Let's look at it on QQQ. Same thing, gap down. This is gap and go, gap down, filled it. And then NVIDIA. See, they gap stayed below the open today. So they took profits, but we still pushed up. Amazon, Apple. It looked like Google was about to take off too. It's the engagement. This like this, even though it ended up BE, but we took Asia low, but we left overnight low, and it took the high displacement, retracement. I was looking for a sell to target here. Just no follow through, BE, small profit, follow the plan, and waited all day for that setup. So that was patience. So the framework didn't play out. I was looking for more sales, but today was just a rotational day within the range. I learned about pattern and narrative myself. That patience is key. Will I watch for tomorrow? TGIF. So 20% retracement or sell above the daily high. Since we're kind of above there anyway. Buy would have to be from EQ or in the previous day's low. But that's that on that. All right, y'all. Y'all have a good day. Peace.